Welcome back to the show. Now, Charles Tarbey from Century 21 now joins us from exotic Queensland with some of the latest property numbers. Welcome, Charles.
G'day, Chris. How you doing, Arthur? How are you doing,
Charles? Very good. You travel more than Tom Panos these days.
I'm a bit tired and tuckered out. I came in from Christchurch into Auckland into Brisbane last night, and early start this morning delivering a talk at Jason Andrews' Real Conference, a great conference for real estate practitioners about being real, which is a nice change. So there you go.
It'd be great to have some real agents out there, some humans.
You're going to start bagging me out, so why don't we go on to the next chart straight away?
Or are you going to do it?
You far away.
One of the two of you always have a crack at me. So
I've been on holiday for a week. I've missed you guys, so I'm back now.
Thank you.
Auction clearance rates. What's happening?
It's great, Chris. Look, it's 70% on a national basis. The last 3 weeks it's been in the 70s, and we've had some star performers in that again. I mean, Melbourne was the star performer this particular week with 76.2% clearance rate, followed by Sydney with 75.3%. But Adelaide, which is now 3 weeks in a row, Adelaide has been in the 60s and 70s. It ended up at 69.1 for the week. So Adelaide's having a bit of a run at the moment. Overall, when you think about the fact that we're in or coming to the end of winter, usually it's not this busy. And I can say to you that it's at least 21% higher than this time last year when I take the 70% and factor in what was happening 12 months ago.
Now, I was talking to Arthur before about how well realestate.com's doing, but I keep seeing your graphs and the homes advertised for sale are going down and down and down, but there's obviously a lot of companies still doing well.
Yeah, realestate.com, I think Arthur could tell you the reasons behind that. They're capturing more and more market share, not that there's much left for them to capture, but they've got a growing business in many different perspectives. But the properties for sale have dropped again. Yes, it's negative 0.53%, and every single week for the last 5 weeks and more it's been going negative. Now, traditionally, again, in winter time, it's not that busy, but we're now in a period where your stock should be really coming onto the market ready for springtime. And last week we discussed the fact that the election date may have something to do with that, because you're not going to put your property up for auction right in the middle, or have an auction campaign right in the middle of an election. That could be part of the problem. Yeah.
And again, talking about the election, and I think the whole of Sky's been talking about it for the whole month. I mean, when it happens next week, what are your thoughts on what's going to happen the week after? Is there going to be suddenly a big jump in change, or are things just going to ease back into stuff? Because, I mean, the sun's shining out there, and that makes a hell of a difference for property as well.
Yeah, and it's always subject to the decision, of course, even though a lot of people think that decision's already been made. I think at the end of the day, the market's very, very active. There are lots of people out there looking, just not as much property for sale. When the sellers start getting a bit more confidence, I think that is what's going to happen, and the listing will come on the market. They're probably coming on the market now, Chris, but they're just not going to auction right now because of the timing. So I think we're going to see a very, very different springtime, a late springtime, where the market actually kicks on bigger than it normally does. Super Saturday is probably going to be really, really Super Saturday when we get around to that point.
And certainly the Residex results were pretty good the other week when John Edwards was on. So that's going to be helping, fueling it.
We're doing okay in that area. As I said, the bet we have with RP Data is on again this year, and at this point in time, unless we have a market collapse in the next 90 to 120 days, RP Data is up for a very, very expensive lunch this year.
Yeah, I've been on a diet for the last 4 days, so I'm getting ready to enjoy the dinner.
Okay.
Anyway, residential rent price movements.
They're going up, Chris, and that's again a sign of the fact that there's not property coming on the market for buyers. First-home buyers are still not out there in the hordes that you might expect them to be. So you've got this different change in the marketplace altogether. Sydney itself is up from this time last year, or January last year, 11.69%. Melbourne's at 7.28%. And Perth, well, Perth's a runaway success still at 17.99%, giving us a total of 12.32% for the actual increase in rent since January last year across those three capital cities. So it's still not abating, but it's not moving dramatically. It's been the 12s for a few weeks. We have started to see a plateau, even though there's some up movement in Perth. We have seen a plateau on a national basis.
And then very quickly, the vacancy rates.
Yeah, Sydney itself is 2.91, my apologies. Also, when you look down at Melbourne, that jumped to 3. Perth jumped to 3.78%. That's the highest vacancy rate Perth has had for a very, very long time, giving us an average of 3.23. We always talk about it hovering above and below the 3 mark. Well, we're above the 3 mark, and Perth is well above the 3 mark at this point in time.
Wonderful. Thanks for joining us from Brisbane. We'll see you in Western Australia next week. Thanks for
Western
joining
Australia
us.
next Friday. Thanks, Chris.
Thanks a lot,
Arthur.
Arthur Tlaftis from realestate.com as well. Thanks for joining us this evening. Until next week, I'm Chris Gray. Good night.